In Your Money tonight, we are getting answers to your questions from a Granite State financial expert.
Financial advisor Sean Toll is here with us again live this afternoon. Sean, it's good to see you. Thank you for always coming in and sharing your advice with us. Let's begin with this question. So if a recession is coming, and we know that experts have debatable points about that, but what are you telling people? Some advice perhaps beyond the talking points, the typical ones we're used to hearing right now.
Right. So if we have a recession on the horizon here, that really is going to mean that we're going to see higher unemployment. We're at incredibly low rates right now. New Hampshire is still in the 2% range or so, but the Fed is increasing rates, and they're trying to create a recession in order to slow the economy down. And one of the side effects of a slowing economy is going to be a higher unemployment rate. So I'm telling my clients right now to take a look at their expenses and try to rationalize everything they're spending their money on. Try to pay off those debts, especially those that will be susceptible to higher rates. That's going to be their credit cards mostly. So try to pay down that debt. Try to make sure you have some money set aside. I like to see at least 6 months of savings in your savings account. So if you do become unemployed, you have something to turn to in order to pay your bills.
Now, Sean, we have an investment question here from a viewer. Tay wants to know, what's the best way to invest $1,000?
Well, that's the best way to invest $1,000 is going to be entirely situational. Okay, if you need this money in the near term, maybe open up a high yield money market account at your bank. That might be paying you 1 to maybe even 3%. If you want to start a savings plan and put some money to work for you, and you've got 5, 10, 15 years, I would look at some stable mutual funds, mostly in the U.S. stock market. Put your money in there, and over the long term, we should see some growth in that. But it's really going to come down to what your objectives are with that money. Do you need it soon? Do you need it later? Is this a long-term investment? You really have to understand what it is you're doing before just making that investment decision.
Sean, this next one is very specific. So let's take a look at this one. For a long time, experts have said a portfolio now with 60% U.S. stocks, 40% invested in bonds was a pretty good mix. But a recent analysis saying that the investment mix is on track now for its worst year for this since 1937. So people are asking about this formula. Should they be changing their portfolios right now?
Well, let's cover that in 2 things, and I'll take the last piece first. Should you be changing your portfolio? I would say no. I find that most investors are very reactionary. When the markets decline, like we've seen this year, the S&P 500, for instance, which is a broad representation of the U.S. equity market, is off about 18% this year. When people see those big declines, what they do is they react emotionally. Okay, and when you react emotionally, it doesn't work for you. For instance, if you're driving and you start to panic, you may get into an accident. When you're investing, invest for the long term and don't panic. These times will pass, and we will see stronger returns in the future. Now, back to the first part of the question, the 60-40 portfolio. Traditionally, the stock side has been your growth component. The bond side has been some stability. Unfortunately, this year, with the Fed raising the rates, with the markets expecting a recession, we've seen the stock market come down, and as rates go up, the bond market comes down. We typically don't see this. Typically, there's an inverse relationship. So it's not working this year, but signs are once the once the interest rate increases subside, we should get back to hopefully a more normal situation where that 60-40 portfolio will work well.
Okay, Sean, really great insight as always. Thank you for spending some time with us this afternoon. Hopefully we'll see you again soon.
Sounds good. Thank you.
Thanks.